Chennai. With me is Ekta Batra and Mangalam Malu. We're getting into festive season and you have Dhanteras, then you have Diwali, of course, so lots of action. For the market, it's cut its losses from early morning, and now the only problem pocket really is the mid-cap index. The Nifty is not doing much, just sort of buying time around the 17,500 level. But the mid-cap index is under pressure now, down about 230 odd points. I think the bulls still have a grip, although the grip must have loosened a little bit. The FI selling has reduced quite a bit, and despite all the challenges that we're seeing in the global market, it's not a bad outcome.
Hi Mangalam, hi Sonia. Yes, absolutely. And I think one thing that stands out is, for example, IndusInd Bank, which is down around 4% and a similar case in point would be something like a Syngene, which has not reacted too much despite the fact that the company is quite bullish on its guidance, though it did see a run up yesterday. And the two commonalities between the two is valuation. So maybe specific stocks valuations are probably going to come into light, and something that the street will probably notice going forward as well, that yes, you report good numbers, but are the valuations too hefty at this point in time? But nonetheless, for the Bank Nifty, currently down around 1%. So let's see whether there's any kind of reprieve in the second half. Hi Mangalam, lot of numbers today.
A lot of numbers to reckon with. And for me, FMCG, you know, you have Colgate today, you have ITC today, you have Tata Consumer today, you have Asian Paints today, and tomorrow you have HUL as well. But you know, I'm just watching out for Canara Bank, because there was a flash at the bottom of the screen which said that a large part of their profits actually came in primarily because the company shifted its tax regime, and as a result of which their profits benefited by about 2,450 odd crores. So maybe there was a smidge of a correction from the highs on the stock. You know, when the numbers came out, the stock was up around 2.5% odd, sitting with a gain of about 1.5%. These were good numbers, but just an additional kicker coming in on the bottom line on account of them shifting their tax regime. But just keeping an eye out on a bunch of other stocks as well. Delhivery, for instance, is one of them, which is lower and how in today's trading session. Everyone was hoping that, you know, the company would do well in the third quarter. That's still to be seen. The question is that, you know, will they do well at the cost of profitability or not? Because in the second quarter, the sentiment continued to remain weak and broadly unchanged from the first quarter. They said spending remained muted due to the continuing high levels of inflation, and Express Parcel volumes, they remained stable in the second quarter as compared to the first quarter, picked up towards the second half of the second quarter, which was ahead of the festive season. So now the street will be looking at what the company does in the second half of this year, primarily because we'll have the festive season and a lot of these e-commerce sales coming by. The question is, will that come at the cost of margins or not? Because service line volumes for the business, while it grew in high teens in the second quarter, supply chain and full truckload volumes declined quarter on quarter, and they anticipate moderate growth in shipment volumes through the rest of FY23. Not good update coming in from the second quarter, and the street does not like it one bit. The stock is down almost, 13%.
So it didn't deliver.
It didn't deliver, at least on the financial parameter. Well,
okay, but as you were telling us, you know, by the way, those are some net interest margins coming in for Canara Bank. It's been a good one this time around for Canara Bank. For the banks in general, right, they've done really well, and the net interest margins for Canara Bank have picked up. On a quarter-on-quarter basis, there's a good amount of an up move. But you were telling us about all the earnings that you're going to get hit with today. Asian Paints is due to report its second quarter numbers as well. What's the expectation?
Trust me, all the earnings that I get hit with, I will hit it right back at the viewers and give them every number that we have to track. So as far as Asian Paints is concerned, numbers expected in the next couple of hours or so. It's a good quarter that the street is working with this time around. 25.5% growth on the top line. You're looking at around 8,900 crores. The EBITDA actually grows 75%. At around just shy of that 1,600 crore mark. That obviously is on account of multiple things. One, you know, the company's taken a lot of price hikes, so they could benefit from that. In the same time, last quarter, margins were at 12.7%, which was a record low for the company as far as margins are concerned. So on that low base, the margins are likely to look strong around that 17.8% mark. And the net profit likely to grow by 80%. You're looking at a number upwards of 1,000 crores, 1,075 crores to be precise. What leads this 25% revenue growth for the company? Domestic volume growth seen between 14 to 15 odd percent. The company has in the past said that they are comfortable with margins around that 18 to 21% mark. So we'll watch out for, you know, what they do out there. And they expect the second quarter inflation to be 1.5% over the first quarter. So is that, you know, reflecting in the kind of price hikes that the company has taken already? Because in this year itself, from November 21, they increased prices at around 8 to 9%. December, we had 4 to 6% hikes out there, 15%, and about 17.5% over the last year. My sense is that realizations would be higher by about 12 to 13 odd percent, and the rest of the revenues would come in from volume growth.
Okay, so that's on Asian Paints. Let's see what they eventually deliver. But the one stock that we did mention right at the start of the show was Indus